So we went over last time the RV terms of the loans and the very basics. So what I'm here to do is go over some of the exceptions. I'm also going to go over what an interest rate should be for an RV. I'm going to do it for both bad credit and outstanding credit and everything in between. Okay. So let's say that you're new, like a lot of folks, and you're looking for the best deal possible. Well, let me tell you, it's not like the car business where there's a true car or there's a standard rate and term. Everything in the RV business is up, it's down, it's back, it's forward, it's side to side. So let's go into some of the exceptions. So first of all, in the last video, we said that for a loan term of $50,000 or above is what you needed to get a 20-year loan. That is the basics, that is the norm. There are exceptions to this rule. There's one bank in particular, if you're putting a really big chunk of down payment. What I mean by big chunk, I'm talking about 30 to 35% down on the trailer, or, well, there won't be motorhomes, but the trailer or toy hauler that you're purchasing, you can get a 20-year term up to $25,000 financed. You can't do this with 10% down. It has to be with 30 to 35% down with this particular bank. Now, for copyright purposes and for, well, let's just say I don't want to get sued, I won't name the bank. The other thing that we run into as dealers is we do have one bank that does things at a slightly higher interest rate, and their tier system is way out there wacko, but they will do a 20-year loan if you're borrowing $45,000. Okay? Same thing goes for a 15-year term. 15-year terms, we have a bank that'll do it between $20,000 and $22,000 amount financed. Okay, so there are programs out there for outstanding credit that's putting big money down, and it's not, I'm not saying like half, I'm talking about 35%. So we're talking on a 30-year, $30,000 loan or $30,000 purchase price, you're putting $9,000 down. $50,000 purchase price, you're putting $15,000 down. Okay. Now, I will segue into the interest rate ramifications of that in just a few moments, but I want to cover the other exceptions to these rules. The other exceptions to these rules is if you're doing a credit union. Credit unions are straight down the middle. They need 10%, 15% down, depending on the credit union. And they will do standard terms of 10 years or 15 years. They do not do 20. So I will leave a link to a couple credit unions we personally use in the description box below. We use them as an outside financing source. We just made the contacts at Beaumont RV. That's beaumontrvs.com. Or you can visit me on Facebook at facebook.com/LevingstonRV. I will also put all those links below in the description as well. But one of them we use in Burbank, Santa Clarita area. They do a max 15-year loan. So even if you're borrowing $100,000, they're only going to do 15 years, no exceptions. They also are going to keep their 10-year term if you're financing over $15,000 instead of 10. So there are a few exceptions in how RV financing works. So how would I go about it? Well, what I would tell most customers is before you start shopping on the internet for a toy hauler, used or new, go down to your cell phone or your laptop and go on Experian.com. sign up, check your credit score there. Now, if your credit score is under 750, I would go down to a local credit union of yours or your bank, and I would get pre-qualified and see how much you can borrow, what your term and what your rate are. Okay. Now, if you come to a guy like me on the dealership lot, if you give me that information, I know where to take you. And then if you tell me, well, when I ran my score, I was a 725, but I'm putting $15,000 down, I can probably beat that bank or that credit union. But if you're putting 0 or less than 10% down, well, me personally, I'm gonna give you a purchase order and send you to that bank to go get a check. But just realize the best deals aren't always about the interest rate. A lot of times it has to do with the term. The other exceptions is subprime lending. Subprime lending is generally with some hard money lenders that do 10% up to 25% interest. Those folks do between a 6-year and 12-year term. Now, there are exceptions. If you're financing over $60,000 and you have a certain debt to income ratio, then we do have lenders that will go 15 years on a $60,000 plus loan. This is very, very rare. But most of the time, subprime lending is going to be maxed out at 12 years. Okay. Now, a lot of that has to do with the dollar amount. So if I have to go to one of my M banks, we call them the M banks. If I have to go to one of my M banks with a loan, a lot of times that loan is under $40,000 anyway. Most folks are not going to qualify for a hard money loan that's over 60 grand. And that is because the interest rate is so high that the payment won't balance. Okay. I'm going to do a future video on that as well. I also we'll link in the description below, I did a video on how to get a loan with bad credit and how to get a loan on older units, and I'll put those links in the description below as well. So with that all being said, let me move into the exceptions on interest rates. Okay. The best interest rate in the business is 3.99% interest. Okay. Now, unlike a car, that is not a standard rate. That is a premium rate that has 3 things that come about with it. The number one thing is the dollar amount financed. You got to be financing in general over $50,000 in conjunction with 30 to 35% down. And then you need to have tier 1 credit. Tier 1 in the RV business is 780 plus. With a couple of our banks, it's 800 plus. If you're anything under 800 with some of these banks, you're tier 2, 3, 4, and 5. That doesn't mean it gets complicated. That's how I should say. The interest rates and stuff are very complicated unless we know you have outstanding credit and you're putting a lot of money down. A more common rate for those that put 20, 25% down and have good credit is usually between 4.5 and 5.99. Those are the more common rates that we find at the dealership that we get and our ability to sell the loan for. Okay, so typically, like for example, we have a outstanding customer that has done a really good job recovering from a bankruptcy 9.5 years ago, and the customer's done a great job reestablishing credit. Well, guess what? None of the prime banks want the loan. So that's where interest rate and term come into place. You have to have no derogatory credit to qualify for the best rates and the best terms. That doesn't mean you can't qualify for an RV loan. What it means is if you have let's say a bankruptcy, we're going to a credit union and you're at 15 years. Okay. If you also segue, you're not going to get the 3.99 or 4.99 interest rate. You're going to be in the 6, 7, or 8% range. Does that mean you can refinance? Absolutely. Once the BK is dropped off, you go refinance it with a credit union, and then you get the premium rate. For subprime lending, which is those folks that, we struggle, everybody struggles with their credit. Those rates range between 9.95 all the way up to 29.95. Now, this is where I'm going to segue into, I'm going to give you a little sneak peek into the next video. If you are a paycheck employee, you're a W-2 paycheck employee, and your debt to income ratio lines up, and everything comes together as far as what you need to get a subprime loan, your max rate will be around 18%, 17.95. But if you're self-employed and you depend on bank statements of proof of income, your interest rate may be higher. I'm going to repeat that again. If you are a paycheck employee or W-2 employee, and your debt to income ratio all line up, and the bank approves a loan, the max rate you'll be at is 17.95. However, if you are self-employed and you depend on bank statements for proof of income on your cars, and you write everything off on your taxes, and your tax return does not show very much income as far as taxable income, then unfortunately your interest rate may be higher and your term may shrink. Okay, so it's not a punishment. A lot of folks that come in, they get